Hello and welcome to IBT, Indian Business Trade. This video will give you a fair idea about an interesting commodity that most Indians love to have: gold. Is gold a right investment asset? Let's find out. So many of us wonder if it's worth or right to invest in gold. In India, the first thing that comes to mind when we think of wedding is gold. For example, if you had purchased gold in the year 2007, say 10 grams, it would have cost you 8,000 rupees. But now, in 2021, the same 10 grams of gold has become 48,000 rupees, which means the value of gold has become 6 times higher. Now that is about 14% return every year, around 3 times higher than an FD return. This proves that investing in gold is not only a wise decision, but also an interesting one. It's clear and evident that whenever the stock market goes down, the market participants start buying gold because they understand that something is not right in the stock market scenario. And historical data proves the same. And this has kept gold as an important investment asset over the years. Investment in gold is not a bad idea at all. In fact, it is a good way to diversify your portfolio. Now, if you are in your 20s, there's nothing wrong in investing in equity and gold. Again, it depends on your risk management, fund flow, your portfolio, and so on. The undeniable fact is that India remains #1 position in the world when it comes to gold consumption. Gold is not only used as an investment, but we purchase gold for weddings, mortgage for loan, sell when there is a necessity for money, and so on. And that's why it always remains as a precious metal. However, the best way to buy and sell gold is in e-format rather than buying it in the physical format. So let's have a quick look at the demerits of physical gold purchase. Being a physical product, gold has to be stored, secured, and consume space. It's a psychological tension where to keep it, how much to store, where to store in a locker or home, and so on. It cannot be divided for investment flexibility. You may have to compromise based on your budget, and this will not be lucrative. There's always a doubt about the quality of gold and whom to trust when you buy gold. Another major disadvantage is the making charges while purchase of gold and wastage or depreciation while selling in physical format. The usual mentality of Indians is the way they look at gold. One, it's in the form of jewelry, and the other in gold bars. Gold should be considered as a commodity investment product. Once this mindset is shifted towards gold, then it's time that you become a smart trader. After many scams, the physical transaction in the market has been stopped and dematerialization came into existence. That's when Demat account was introduced, which means all holdings of the participants are now electronic. Demat account is required for stocks, whereas an online trading account is sufficient for investment in gold commodity trading. So why is gold the most effective commodity investment in a portfolio? First of all, it's highly liquid. Next, it has lower volatility. And it has outperformed broad-based indices, sub-indices, and individual commodities during low inflation periods. Compared to other commodities, gold is a more operative diversifier. It has delivered risk-adjusted returns when compared to other commodities over the years. The weight of gold in commodity indices is increasing. So for a planned distribution, the weight of gold should continue to increase. As mentioned before, the volatility of gold has been constant in spite of the unpredictability in equities, bonds, and other assets. Gold allocation of 2 to 10% in a typical portfolio has provided better risk-adjusted returns than those with other commodity allocations. Gold has also delivered better long-term risk-adjusted returns compared to other commodities. Over the long term, gold's average annual return has been 10.4% and a compound annual return of 7.6%. And in the long run, gold returns are at par with the stock market. Hence, investors have recognized the benefits of investing in commodities, especially gold, as they have proven to improve portfolio risk-adjusted returns, offering diversification, inflation protection, and an element of smoothing across economic cycles. So I hope that you now have a fair idea about gold as a commodity and why you must consider investing in gold. Stay tuned for more updates on commodity trading. If you found this video useful, please do like, share, and subscribe. Thank you.